Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, July 19th, 5:09 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in an uptrend. As you can see over here on the trend gauge, we've got the magical 4 green arrows pointing, representing the fact that all 5 of the major indexes are trending above their 21-day moving average, above their medium-term 50-day moving average, and above their long-term 200-day moving average. Market leaders acting very well also, although for the most part took a break today. NASDAQ 100 still extended from historical norms versus its 50-day moving average. So speaking of today, what just happened? Leaders taking a rest, and money just rotated into the lower beta sectors today, almost the complete opposite of what we've been seeing lately. The leading sectors today were staples, utilities, healthcare, and real estate. We'll take a look at SPHB and SPLV. Those are 2 ETFs that help us track what's going on a daily basis. Let me fix a couple of color issues here. So here's what happened on the indexes, the final numbers. RG8 up slightly, 0.05%, uh, led by ARK-K on the upside. On the downside, FFTY, which is the IBD 50. That's when that's down, that's a clear indication that leading stocks are taking a break, and that is what we saw on the day. S&P 500 up 0.24%, thanks to sector rotation, money coming out of sectors into other sectors. One of the reasons why we're a big proponent of keeping a core position in the S&P 500. NASDAQ 100 just barely down on the day. Dow Jones Industrial Average up 1/3%. Mid caps up a little better than 1/3%. Russell 2000 small caps up 0.45. Global diversified 60/40 stock bond up 0.12%. In-house GROTECTION, we were down 0.11%. Our gains from SSO, that's the leveraged S&P ETF, offset by the pullbacks in some of the leaders that we're holding today. We'll go through all the charts when we get through the tail of the tape. Let's dive right into it. Here's the S&P 500. You can see let's take off the stochastic so we can see this a little bit better. Off the highs of the day, but a good day nonetheless as we continue higher. We are 5.9% still, same as yesterday, above the 50-day moving average. That's kind of at the top of the range. I'd like to say I'd expect a pullback, but I've been expecting a pullback for a while. We're just kind of in sitting mode today, or not just today, but over the last couple of weeks. We got our money into the leading stocks and leading sectors, and now trying to sit with it as the bull market progresses. So there's the S&P 500. Let's look at the NASDAQ 100. Minor weakness today, closing just barely on the downside. Was much weaker earlier in the day, recovered and actually turned positive by the close, making a higher high just barely, as you can see, but giving some back later in the afternoon. Let's go to the Dow Jones Industrial Average. This has been acting a little bit better lately. In fact, let's see, that's 3 of the last 4 sessions showing relative strength. You can see broke out yesterday, made a higher high, pulled back a bit to the downside, but still higher closes. This relative weakness, which we've been seeing for 3 months on this is an extended period of time, and I would not be surprised at all if this started to show a bit more relative strength. Let's go to mid caps. And small up again today, 3rd day in a row. Bounced off the ADMA a couple days ago, making higher recovery highs. Still not surpassing the February highs. Mid cap, same thing for small caps. Not quite there yet. Acting very well though on this big positive reversal that started on the 6th of July. Those are the 5 major indexes. Let's take a look at the VIX very quickly. VIX up despite an up day in the market. My guess is a little bit of defense being played as we were waiting for 2 of the big tech names, not 2 of the big 7, one of the big 7 and one that is certainly a household name, Netflix and Tesla. After the close, we'll talk about that momentarily, but bouncing a little bit, still below the declining 21 EMA. That's what we want to see. What did the dollar do today? Dollar up 0.4%, second straight day, bouncing off the bottom after this big washout last week, ran into the declining 8 EMA. What did that mean for precious metals? Gold just flat on the day after a nice move up yesterday. Silver continuing to show strength. Remember, silver has economic component, industrial component. So uh, if the economy's looking better, that means that more silver will be used in more products, and that may be why we've been seeing the strength that we've been seeing relative to gold recently. Gold stocks doing the inverse of the dollar, down 0.83%. Nice little tight consolidation inside day today. Nothing wrong with that at all. Bitcoin point up over about 1.1% today, still below the 21, holding the 50-day moving average. Enough with the pullback already is what the Bitcoin bulls are saying. Bitcoin related stocks had a nice day today. Our bellwether for that, for the miners anyway, is WGMI. Nice bounce off the 8 EMA there today. Let's go to bonds. Start with BND, the broad bond index, up on the day today as bonds were across the board, meaning yields pulling back slightly. Here's the TLT, that's the 30-year, up 1.13%, trying to get back above that 200-day moving average. First close above the 50-day moving average. How about the yields? Let's start with TYX, the long bond, down 1.6%, continuing to plunge lower after that failed breakout. Remember the old saying, from failed moves come fast moves in the opposite direction. That's what we're seeing with yields here, but we're coming into some support area around this 200-day moving average and the recent low of the range over the past 5 weeks. TNX, 10-year, down to the 50-day moving average today. 7 of the last 8 days, the yield has been lower on the TNX. That's all the inter-asset correlation we look at with every video. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. So news, Tesla basically flat after hours, up a tiny bit. Netflix down after hours. These two kicked off big tech earnings reports. We'll look at the charts in a moment. Day count, 7 of the last 8 days up, a 32-day rally since the breakout. 7th day above the ADMA, 37th day above the 21-day moving average. Pull back a little bit on the NASDAQ 100, but still 8.7% above the 50-day moving average. Positive sectors today: oils, banks, and defensive lower beta names, XLPURE, staples, utilities, real estate. Also healthcare, retail, and transports up on the day, down on the day. Gold stocks, semiconductors, builders, ITB, ITA also, and XLBINK. That's basic materials, industrials, and tech. We'll take a look at some portfolio tickers as well as SPHB and SPLV as promised. No changes to the portfolio today. Bottom line on the day: leaders pause amid rotation into lower beta sectors. Nothing wrong with today's action whatsoever. Let's look at SPHB first of all. This is the high beta ETF. It's been doing extremely well this year. Note the relative strength line. Just up a fraction on the day, was down most of the day. SPLV, low volatility, up 0.74% on the day. Now look at how the relative strength line has just been in a free fall on this. If you look at this, you might say that's not a bad consolidation at all. If you just look at the chart, you can't look at a chart without a relative strength line. William O'Neill knew this. If you ask Mike Webster, he'd say that the most important line on a chart other than price is relative strength. I concur with that 100%. You can see, despite that move up, the relative strength line is at lows, and this is reflective of the rally we've been having in the big growth names and growth in particular relative to value. So let's look at the earnings names really quickly. Netflix down 5.6%. So that's not so bad. I mean, that just brings it back to basically where it broke out. Nice relative strength in this stock, ran quite a bit off of this 411.50 about 3 weeks ago. So from 411 to 477, just taking a little bit of a break. Not a miss on their metrics. In fact, they beat on revenues and they beat on subscriber growth as they're continuing their shared password crackdown. The other big name, Tesla, after hours has been trading in a pretty tight range. We reviewed our risk plan. Don't have to implement it at all as we're higher after hours, but we took our full 5.7% position into earnings, and the conference call I think is underway. Haven't seen any major spikes off of this, but it's been really trading tightly between like 284 and 296 after hours. So uh, the first bullet has been fired of the earnings for the big seven. Let's take a look at a couple of more charts. ELF, one of the leaders. This is kind of a changing character candle. Is it just a one-day candle down 5.92%, volume a little bit higher, still above the 21-day moving average? But something came public today, ODD, and they don't have it yet in MarketSmith, but this is a fairly good size cosmetics company. Had its debut today, and I was reminded with ELF being down today, how Chipotle despite the market being up, had two big days of underperformance on 615 and 616, and that coincided with Cava, which has been called the Mediterranean Chipotle, coming public back on 615 and 616. So is it just a matter of some fund managers taking some money from their cosmetics allocation, their beauty care, personal care allocation, and moving it into ODD at the expense of ELF? We'll see over the next couple of days and weeks, but this still very much a leader, hasn't had a base uh, in quite a long time, and it would be entitled certainly to have one. Let's look at some standouts in the portfolio today. Really, to the upside, there was only one, and that's the U, up by 2.91%. Let's take a look at some leaders that we own that pulled back from extended conditions today. SMCI made a high of almost 330 today, 329.07, pulled back to 300, is holding there, but down 4.63% on the day. We took some profits on this around 300 last week. Looking for a little bit more of a pullback, and we're always on the lookout for that 60-minute stochastic cross as a possible re-entry into some leaders if we want to buy some of the leading stocks on a pullback. So SMCI down on the day. Celsius got a downgrade. Seemed like somebody knew about the downgrade yesterday. You can see it closed at the top of the range. We really need to see it reclaim the 21 EMA. But good strength late in the session, back to positive on the day. But these last 2 days of selling, maybe somebody knew the downgrade was coming. But anyway, when you finish positive on a downgrade day, that's a good sign for a stock. This thing really hasn't been going anywhere except chopping around over the last 3 weeks. Our position, we're just barely positive on it. And you can see from the relative strength line that's actually trailing the S&P 500 during the holding period. So on thin ice with us is Celsius, as better opportunities. We're always on the lookout for better opportunities. LYV, after quite a nice run up with a pullback today, 19% above average volume, down 2% on the day. Fantastic looking chart on LYV. And that's about it. Just down a little bit on the day, mostly less than 1%. The other ones that were holding, SMCI, as I said, extended, pulled back. That was the biggest mover on the day. But with us cutting the position, we didn't feel the need to have to cut anymore. Actually, it was over 4% extended at the top early in the morning after the open, and that would have been a 4 ATR above the 21 EMA. Tempting to take some off the table there, but we already took some off with it. Don't want to be caught without a position. As Bill O'Neill said, there's nothing worse than a sold out bull. That's going to wrap it for today. As always, we'd like to hear from you. You can email me, Don at RevereAsset.com, or my partner, Dan Stewart, Dan at RevereAsset.com. Phone 855-REAL-WEALTH. That's 855-732-5932. Always a reminder, it's not how much you make in the market, it's how much of that you can keep. We've got gains in the high teens over the last 6 weeks. In our GROTECTION portfolio, we've got stops in place to protect on any pullback. A lot of leaders. I mean, it's a bull market. Don't listen to any of the naysayers about what's going on with. Uh, don't listen to the macro masochists that are convinced that the sky is falling. Um, it's not. And like I said earlier this week, we'll be long until proven wrong, and we haven't been proven wrong yet. First bullet fired of the big 7 on earnings, surviving that so far to this point. We'll see what tomorrow brings. Like I said, it's not how much you make it, it's how much you can keep. And with that, I'll wrap up Wednesday, July 19th edition of the Revere Asset Management Daily Market Insight video. This is Don Vandenbord. Thanks for listening and have a great day.